Good evening to all of you, and welcome to SC Securities Weekly Market Update presentation. So, this week we got a lot of highlights and market updates that made the market moved up. And quickly moving to the ASPI results in Monday. So, after the losses that were incurred during last Friday session, on Monday the ASPI bounced back to positive territory, halfly recovering or partially recovering the loss incurred during the Friday session. So as a result of that, ASPI close at 10,817.24 with points up by 158.52, along with the S&P SL 20 index with points up by 23.54, reaching to a level of 3,698.12. So on Monday, the turnover was recorded to be an amount of 6.1 billion, which can be recognized as a healthy turnover, relatively higher from this year's daily average turnover, and that turnover was majorly led by retail and HNI participation that has been witnessed in LOFC, Expo, and LOFC counters. So when it comes to CLC, that incurred losses during last week, the end trading sessions, was managed to gain up by 10.4%. So this momentum continued on Tuesday as well. The SPI reached to a level of 10,928.60 with a total turnover worth of 6.6 billion. And this turnover was majorly backed by the gains reported in LOLC, and alongside S&P SL 20 index also managed to go up by 49 points to reach at a level of 3,747.53. So on Wednesday, the SPI declined and witnessed a slight decline. That was majorly because of the fact that market was expecting some sort of an adjustment with the upcoming monetary policy review meeting that is scheduled to be held on Thursday. So nevertheless, it have actually not have that sort of a big impact on the market because the CBSL has decided to maintain their policy rate at the existing levels, and I'm hoping to discuss about that thing as well later in the presentation. So, and on the other hand, government made a significant decision on Wednesday to revoke the gazette that they have previously imprinted upon the importation ban on chemical fertilizers. So, with that decision, the plantation stocks picked up because currently the palm oil sector is experiencing all-time highs. So, because of that, the financials of the plantation sector is the investors expect that they will yield good results in the coming quarters. So, along with that, the fertilizer ban revoke made the plantation stocks goes up. So, coupled with the plantation stocks and the Bill LOLC, Expo, and Sun stocks managed to uh, gain up during the session, even though the Wednesday's index showcased a slight decline. So, continuing the momentum, on Thursday, ASPI, however, increased up by 115.67 points to reach up to a level of 11,025.73, a new all-time high, a fresh one. A slight increment showed from its previous all-time high of 11,024, and ASP and S&P SL 20 alongside also showcased an increase with points up by 16.35 and reaching to a level of 3,767.41. So this is also basically because of the plantation stocks pick up on that previously mentioned fact. And also the gains were majorly backed by bill and expo stocks other than the plantations sector's stocks. So on the last trading session on Friday, SPI went to a level of 11,190.97.67 with points up by 171.95 along with the increasing S&P SL 20. So when we consider the foreign sales and foreign buying for the week, in the day of in Thursday, the foreign sales was amounted to be recorded a higher amount compared to that of the previous session. So for the Thursday, foreign sales was amounted to be somewhere around 1 billion, which was comparatively higher than the values recorded in the previous session. So because of that, for the entire week, net foreign outflow was amounted to be the total of 1.52 billion. So when it comes to turnover, the highest turnover was recorded in Thursday, 9,980. But when it comes to rest of the turnovers in the remaining 4 days, they all they all are above the average year's daily turnover. So we expect this bullish momentum to continue for next week as well, but we have to be a little careful because the month end is coming, so we can expect a possible amount of selling to come into market next week. So, moving to this week's economic update, the major focus was given to monetary policy review. At the monetary policy review meeting held last 24th November, the Monetary Board of Central Bank of Sri Lanka has decided to remain the policy rate at its existing level. So, accordingly, standing deposit facility rate will be remain to stand at 5%, whereas standing lending facility rate will remain to stand at 6%. Other than that, bank rate and also the statutory reserve ratio will witness no change but will remain to stand at 9% and 4% respectively. So, with the monetary policy review, the press release mentioned that the CBSR, the central bank, has considered multiple factors when arriving the decision, especially had very much of a focus on external sector performance. It said that the resilient performance in the export sector, despite the ongoing pandemic and all sort of barriers, and also the revival in tourism sector and the rising worker remittances, those current economic conditions and expected developments are majorly focused when arriving the decision. Even the current inflation rates was highlighted during the monetary policy review presentation, and it meant that as of the NCPI based inflation for the month of October, it reached to a level of 8.3%, which is notably high. So the reason that was explained from the central bank side was that is basically due to the supply side disturbances and also the surging global commodity prices. So during the presentation and during some sort of a press conference that held this week, the governor said that he was much confident these crises, the inflation crisis, will somewhat calm down by the beginning of next year, January 2022. So, and on the other hand, the very recent decision of government to revoke the previously imprinted gazette on the importation ban of chemical fertilizers. So, because of this reversal, there was, as I mentioned during the previously, the plantation sector stocks picked up, and also major impact can be caused to the companies in plantation sector like rubber and tea, because much of the analysts have forecasted that there can be a crop reduction in this segment, but with this reversal of the government decision, we can expect the financials of a plantation sector will continue to go up, and they will result much of an impressive results in the coming quarters. But anyhow, government also mentioned that they will further incentivize the organic agriculture and will support by way of subsidies or maximum retail price for those who don't use any hazardous inputs for their cultivation purpose. So this week's Treasury bill auction held, and central bank managed to sell the entire lot prescribed and get a total worth of 61 billion rupees from the T-bill auction. So yields dropped, continue to drop from the last week as well. So accordingly, 3-month yield went down from 7.77% to 7.53, 22 basis points down from the last week's figure. And along with that, 6-month treasury bill yield and 12-month yield also went down by 1 basis points each 6 month from 8.03 to 8.02%, whereas 12-month is declined from 8.17% to 8.16%. So, out of the entire lot, 49.17 million worth of treasury bills was accepted from the 3 months bills category. So, major demand could have been observed in that segment, but compared to those of the previous auctions, we could see the central bank is now much more forward to rely on the rest of the two types of treasury bills as well, 6 month and the 12 months one. So, moving to the commodity prices update. Sorry, before that, the exchange rate. When we have an exchange, when we have a look at the exchange rate for this week, LKR managed to slightly appreciate against these four mentioned currencies: USD, GBP, Euro, and Japanese yen. So, when it comes to commodity update for this week, oil prices and gold prices declined, but the copper prices and aluminum prices show somewhat an increase. The decline that was caused in the oil prices was majorly because of the fact that investors worry there can be a surplus in the oil barrels in the coming quarters because the US decision to release oil reserves from their official reserves, along with some of the top economies like Japan, India, UK, South Korea, and the China. So with this decision, investors expect that there could be a surplus in oil barrels in the coming periods. But the analysts, on contrary, say that there won't be that kind of a surplus in the market because reserves cannot have make that kind of a manipulation to prices in the uh, oil market. So there can be somewhat of a contradicting ideas like that. But anyhow, US promised so far that they are going to release 50 million oil barrels from their reserves, whereas India agreed to release 5 million oil barrels and UK to 1.5 million oil barrels. So gold set its worst week in 5 months this week because usually investors tend to believe gold as an inflation hedge, but with the idea that US Federal Reserve would possibly make immediate actions to tackle the interest rate, there the market experienced a decline in gold prices. Copper prices also fell on Friday because of the reason that a new variant of COVID 19 was recognized from South Africa, and because of that reason, commodity prices in the copper segment fell down. But overall, base metals act on a mixed note due to the fact that some impressive manufacturing sector statistics from UK and US, along with the COVID 19 numbers increase in the European region. So, finally, to the international market side, Asian markets on Friday fell down because of the fact, as I mentioned previously, a new variant of COVID 19 was recognized in South Africa, and that was kind of a widely spreading, and that is an vaccine resistant one. So, because of that reason, investors are now much more tend to go for safe haven bonds, yen, and the currencies like dollar. So because of this reason, even the Japanese market Nikkei and also Hang Seng experienced nearly 3% declines in their indexes today. And when it comes to US markets, Wall Street ended higher on Wednesday after gains from the uh, tech stocks, and Dow, however, lagged by some poor retail earnings recorded. US markets remained closed on Thursday because of Thanksgiving, and European shares also shows an upward trend in the Thursday backed on the technology shares. And on the other hand, European Union's executive board has recently published draft laws to implement a one particular security market representing all the countries from European region. What they meant to say, the reason for implementing this kind of a security market was to give a hand for the companies to raise fund for greener products. That's how they mentioned it, for greener products, in order to recover from the downturn that caused by the COVID-19 pandemic. So these are the points I have to say from my end. From here onwards, Harin will continue the presentation. Over to you, Harin.
Thank you, Sachini. So when we look at gold for the week, which is which is ending at 26 November, which is today. So 2 weeks back, I clearly mentioned that gold is the oil price is actually trading in a descending formation, and it's basically we can clearly say that the price is actually declining, and it is in a declining momentum. So we saw that the price was reaching the level of daily resistance 82.5, 84 per barrel, and then the price starts to decline from that key area and reach the daily support level, the previous support level, which is 74.5, $76 per barrel. So now the price is actually trading below that key level of support, and that support level has become officially a daily resistance zone. So if the price actually manages to sustain below this key level of resistance 74.5, 76, the oil price could further drop to the daily support level of 66.5, 68, or even consolidate in between the price level of 66.5 and 76. So the oil price per barrel could consolidate in between that area. So we had a bearish crossing somewhere around in beginning of November, and that bearish crossing from both the EMAs, which I have taken 18 and 8 EMAs, we can clearly see that the price starts to trade below those EMA levels and managed to break the current previous low, which was actually was recorded in 22nd of November. So after breaking that key level, we can clearly see with that that daily support level and that key low, we can clearly see that price is actually trading below that daily resistance level 74.5, $76 per barrel. So this could actually potentially mean that the price of oil could actually further decline to the daily support level 66.5, 68. So or even consolidate in between that area. So this all depends on the opaque news that we can clearly see that's happening, where supply seems to be getting increased in oil. So with that being said, the all share, looking at the all share index, we were able to see today it made a new high again, which is 11,225.66, and managed to close that 11,197.68. So the RSI comes to a level of 72.8, which is quite in the overbought at the region. We had previously we had a high which was actually recorded 11,117.79. So that was basically somewhat near the daily resistance level of 11,000. So that psychological area, we had some sort of a struggling over there, somewhat around in 24th. We were able to see that price got rejected from that key area, but again on 25th of November, we were clearly able to see that the price managed to break the previous high and make a new all-time high. So this could potentially mean that the index could actually reach the daily resistance level of 11,450, 11,500 in coming weeks, and also we might see some sort of a new higher low formation as well, where the index could actually retest somewhat around in 11,000 area, since it broke the key level, officially broke the key level of 11,000, which is actually a psychological area. So index is quite bullish. So we can clearly see that with the trend line that I have drawn, we have higher high formations, higher high again, and the new higher high is still in the move, and this could be somewhat around in the near the daily resistance level 11,450, 11,500. So once that key area has been touched, we might see some sort of a higher low formation or profit taking at that moment. And if the index manages to break that 11,500 key zone as well, the next would be the 12,000 psychological area. So The moving averages, of course, indicates a bullish momentum, a strong bullish momentum, as the price as the index is actually trading about those moving averages. And whenever the index comes below the 8 moving average, it actually the index gets absorbed, and it actually the bullish momentum continues at once again. And over and over again, we can clearly see whenever the index came below the 8 moving average, it usually gets absorbed, and the bullish momentum actually continues and makes new higher high formations. So with that being said, yeah, we'll be able to see the index sustaining above the level of 11,000, above the level of 11,000, and we might see the index moving towards 11,450, 11,500, that key level of daily resistance. So just keep in mind that the RSI is quite overbought, and which is in the 72. So we might be able to see some sort of high low formation as well, like previously. So even though we might be able to see that high low formation, or even the RSI is even, yeah, if the RSI is overbought, the index is quite bullish at the moment, and the bullish momentum, hopefully the bullish momentum would continue for the next few upcoming weeks. So looking at Haley's, we had some sort of a consolidation happening since September second week, and we were able to see the price was actually trying to break the level of 100 and trade above the key level of 100, trade below the level of 100. And once again, we were able to see in this current week, we were able to see the price actually managed to close above the psychological level of 100. So we are at the weekly support of 100, 102.5 and trading in between that key area. So RSI comes to level of 59. So it's basically in the mid range. And that, with that being said, we do have a upwards trend, which we can clearly see that the price is inclining. And this weekly support level, once it starts trading officially below above the 102.5, once it closes for in the next week 102.5, we'll be able to see the Haley's price of Haley is moving to the monthly resistance of 115, 120. So that would be the initial key target, which was actually even in August 30th, August last week, we were able to see how price managed to reach that 124.75, that key area of monthly resistance, where the price made a high of 124.75 and then dropped to the level of dropped to a level of 94.5 and making a low on 15th of November. So we had the consolidation happening over there, and now once the price is over that key area, the key area of support 100, 102.5, we can clearly see the price moving towards the monthly resistance once again 115, 120, and further breaking that level, we might be able to see a new high formation happen, occurring at the level of weekly resistance 135, 137.5. So the moving averages, of course, we can clearly see it is in a bullish momentum. So even whenever the price comes below the moving averages, it quickly gets absorbed, and the volumes push, the demand and the volume comes in, and the price moves up again. So since the price is actually trading above both the EMAs, we might be able to see some sort of bullish momentum happening again, and that consolidation will be over soon, since and then the price would actually reach the level of monthly resistance 115, 120. So thank you everyone for watching, and I hope this was very insightful, and hope to see you all next week once again, and have a great evening and a great lovely weekend. So thank you everyone.